Hello everyone, bonjour à tous and welcome to Dream Team Podcast, the podcast where we explore the intersection of sports and business. Why am I speaking in English today? It's because my guest is a famous American investor in sports and he has accepted my invitation to open his own toolbox. So you are going to listen a true masterclass about investment in the sport industry. Today's guest is Kai Bond, general partner at Courtside VC, seasoned entrepreneur, product leader, and venture capitalist. Hello, Kai.
Hey, how are you?
I'm very fine. I'm so happy to have you. It's been a long time. I'm chasing after you.
Well, it's great to be here. I'm glad we finally made it happen.
So thank you for being here. You have an amazing career. Product leader, entrepreneur, now investor. So we're going to deep dive in. But let's start with the beginning. I have to introduce you. So who is Kai Bond behind the LinkedIn?
Again, thank you for having me. I am based in New York City and I'm a partner at Courtside Ventures. Spent, the last 25 years split between working at big companies. Started my career at Microsoft, started 3 businesses, 2 in the gaming space, one in a sports media business that was acquired by Samsung called Pixie TV. After the sale of that business, I thought I was going to start a 4th company, but I had the opportunity to start investing. And I was an investor at Comcast Ventures, where I invested in 4 different deals with the team at Courtside. And after working with them over the course of several years, 19, I joined as a partner here and have been here, through the last several funds.
And how your passion for sport has started? Were you meant to be in the sports industry or?
I've had a lifelong passion for sports. I grew up and I played soccer competitively. I played baseball, any sport I could possibly play, whether that was pickup basketball, football, tennis. I just always wanted to be outside playing sports. And I think for me, was and still is, the thing that connects everyone in the world, right? There are very few events, activities where you can go and there's every race, religion, gender, age, all rooting for the same team or the same player. And that is something that's beautiful. It's a global. So, I've met, close friends, lifelong friends through sport. I've learned lessons about life, hard work, and teamwork, dedication, commitment. And so almost everything that I've learned in my life has come from, playing sports. And when I had the opportunity to start my 3rd business, I really knew nothing about the business of sports. And, it was a big learning curve and it's been part of the fun. I have a passion, a hobby, and can apply that every day in my professional life. So I'm very privileged to have that opportunity.
Can you tell us about your gaming ventures and the sports ventures? How did you start this? And what did you learn from the gaming ventures that you brought to your sports venture?
Yeah, my first 2 businesses that I started were in the game space. For me, if I was not playing, I was at home playing video games, and I love video games. Something that I did with my brother, something I did with my friends, and we'd get together. I was, working with my business partner who I started 3 companies with, and he had a game studio. Again, it was one of these areas where taking the leap of faith to be an entrepreneur and also working on gaming was an opportunity I couldn't turn down. So, I think there's tons of lessons learned for me as an entrepreneur that I bring into venture, but I think some of the key ones, and they overlap a lot with the world of sports. The best entrepreneurs are very similar to the best athletes. There is a commitment to continuing to improve, right? So you see players every offseason working on, if it's a football match, they're working on their left foot, or they're working on their speed or agility or endurance. That's true of a CEO. You might be a great product focused CEO, but getting better at business, getting better at managing teams, building company culture. And so, that's one of the characteristics, I look for in founders, that coachability, that desire to continue to improve and get better. And so that's a big piece, I think, for us, particularly as early stage founders, right? What is your ceiling? How do you continue to get better over time? Understanding where your weaknesses are and what you need to improve on. Mm-hmm. I think the other side of it is, understanding that the entrepreneurial journey, as well as, where we invest in venture at the early stage, these are long cycles. You're talking about, seed stage businesses have an average of, 7 to 9 years before some sort of successful exit. The commitment to, the craft, the commitment and the perseverance that has to go into that face a lot of obstacles, a lot of challenges. The ability to overcome those and continue to persevere through the hard times to get to the finish line is critical. See, right? So I think that's another big area for us.
Okay. So you've been building companies. Now you're an investor backing entrepreneurs. What do founders get wrong about VC?
I would also say I'm still an entrepreneur. Like, as a venture capitalist, we're still out raising money, very similar to founders. We are, in many cases, trying to beat the odds. We have competitors, many parallels. I think, one of the biggest misconceptions, and I didn't even realize this as an early entrepreneur, was just why and how important market size and how big a business is, right? So we manage $100 million fund 3. In order for us to be a top performing fund, we need to, 3x, right? Which is essentially returning $300 million to our investors just to break even and return capital and be successful. And that's not even successful, just returning capital. That means we need to own 10% of $1 billion outcome. So when we talk about, outsized opportunities, things that are non-obvious, that are massive growth markets that we have to, kind of see around corners and identify where, the industry is going, the sheer size and what we need in order to call something and deem it a success has to be massive. And that, I think, is oftentimes a misalignment. I talk to many founders and I tell them, this is a great business. It's not for us. You should find somebody maybe who has a $20 million, pre-seed investor, raises little capital. If you think you can exit a business for $200 million, they'll be very happy. But for us, it's not the same. Right? And I think that's probably the biggest misalignment. And once you find alignment around those, then it's a matter of, how you can be helpful in executing.
You just mentioned that now Courtside VC has a 100 million found 3. It means that there was a found 1 and found 2. So you decided, instead of building a new venture, you decided to join Courtside VC. Can you get back to this decision? And can you just give us a large scope of the story of Courtside VC from fund 1 to fund 2 to fund 3? You wrote a very great article on Courtside VC I read for preparing this interview, and I think it's very enlightening. So please share that.
I'm happy to share. My partner, who was the founding partner, Vasu, when he started this business, he started a company in the sports data analytics space called Crossover. He was developing software, essentially an enterprise SaaS business. He was selling this to teams, a basketball league, high school, college, professional. No VCs would give him any capital to back the company. And he was raising from strategics in the space, individuals who were team owners who understood that data analytics would fundamentally change the way in which their teams operate. And, he exited that business and went back to those investors in his startup and basically said, look, no one is deploying capital. This is, 2016. No one's deploying capital in the world of sports. Right? We're almost talking about a decade ago. And things have changed dramatically in those 10 years. The thesis behind the fund was you can generate venture scale outcomes in the world of sports. But you have to change the definition in how you view sports. Sports is very broad. Sports is we call, stick and ball games, being played on the field. To us, sports is kind of sits at the center, and there are all of these, spokes to the wheel. So this includes, athlete performance, includes media, entertainment, gaming, health and wellness. And so, when you start to look at the types of businesses that would generate venture scales, it's actually a very broad. And so, fund 1 was a thesis. Can we generate venture scale returns? And, in fund 1, we did a great job of generating venture scale returns. We had a successful exit of a business. The Athletic was acquired by the New York Times for $500 million.
Yeah.
We sold a company to Microsoft in the interactive streaming and media space. We sold secondary shares in a company that was a marketplace in the sports world. We were able to prove this thesis out. And once we were able to prove the thesis out, we went on and raised fund 2. And so fund 1 was a $35 million. In fund 2, what we realized was, sports is global, right? If we want to be successful investors, you can't limit yourself to a stage and seed and one geography. You need to think bigger. And so we had a very intentional effort to go out and raise capital from LPs all over the world. We now have LPs in, Brazil, Mexico, the US, Europe, India, and that gave us additional expertise, knowledge on the ground. And so we started to deploy broadly.
LPs is limited partners, is the people investing in the fund. So they're giving you the money for you to invest in the right company. I'm just giving that background to the listeners.
Our investors, yes, are the limited partners who invest in our fund. We deployed capital during COVID, which, many people sports was not being played, right? It was like, how are we going to do this? And the evolution of the gaming component really came to light because we always thought of, gaming and sports. When we think about investing, we talk about identity, consumer identity, right? So if you think about people who are athletes, right, they'll say, I'm a baller, I am a sneakerhead, I am a gamer. Right? And that idea of consumer identity means there's a community around it. And the last thing people stop spending on is their consumer identity. And we saw the shift from fitness go from, gyms into home, right? And you didn't stop working out. You just changed the way you worked out. Fortunate to have several great investments in the health and wellness space and fun too, in gaming. And then, as the world opened back up over the course of 4 years, sports investments as well. And so, based on the success of what happened in Fund 2, we raised $100 million Fund 3. And so we went from 35 to 55 to $100 million over the course of those funds. And it's been an evolution of, building the team out, building the thesis, that the more capital you raise, the bigger the outcomes go. We're in a process of learning and growing and getting better each fund as we progress.
Yeah. So maybe can you define and clarify in what you're investing and what does it mean to invest in the sports? And you said it's very broad. So in this broad landscape, what do you do?
Yeah, sure. So, our thesis always is changing, right? Based on distribution, technology, based on, consumer spending habits, society and culture changing, we make different types of, when you look at Fund 1, as an example, we did some esports investing. We're in 100 Thieves, great business. Streaming platform for esports was acquired by Microsoft. But as we saw, the market and in the total addressable market not growing at the same pace, and knowing that we needed bigger outcomes in Fund 2, there was a major announcement in policy in the US where it's called passport reform, where it was the legalization of sports betting, which allowed states to do online sports betting. So we saw the evolution of daily fantasy move into sports betting. So we started deploying capital in a new segment of the market where we realized there would be massive growth, right? And getting in early on the ground floor and a lot of great opportunities there. So again, that was a new thesis, right? It evolved and it's perfect. It's the intersection of gaming and sports. I started a real money gaming company, identified this opportunity and deployed a lot of capital. And then you look at the evolution into Fund 3, we understand AI is going to have a major impact on the world, having an impact on sports as it is on enterprise, Fortune 500 business. So we've invested in companies like Cam that does real-time language translation, in live sports broadcasts. So if you're watching a broadcast in, Portugal and you're watching a sporting match, you can, get that translated into 40 different languages in real time and reach a new audience that you've never had before. And so, with these businesses, right, it could be the moment in time where culture and society is. It could be things like COVID having an impact. It could be, legal and regulatory changes, could be advancements in technology. So with each one of those, we kind of challenge our core thesis and try to identify new opportunities and where there might be outsized returns for us.
And what does it change for LPs, your investors, and for the pipeline you have for the company you're deploying capital from being a fund of 55 to being a fund of 100 million? It's hitting something special, I guess. But what does it change?
I don't think, anything changes from a thesis perspective. We're still looking for amazing founders in new emerging spaces. I think there are certain mechanics that go behind that, right? So when we think about ownership, in a Fund 1, we can maybe own 5% of a company. That would return the adequate amount of capital. We recently deployed money and we're actively investing out of Fund 4 now. Our ownership is going to be close to 20%, right? You need to have that type of ownership in order to make sure over the rounds of dilution that you can still defend that position and have the outcome you need. We really look at ownership as a key difference, I think, in terms of returning strategy. And then, how are you defending that position? Where is your the dollars that are following on in subsequent rounds? So we might invest in the seed. That means that if we have a winner, we need to continue to deploy capital in Series A. We might want to continue to deploy capital into Series B, because over a period of 3 or 4 years, kind of where some of the winners in your portfolio are coming.
I think I heard and I read that for the Fund 3, you had a couple of great and cool LP. Can you share that story? How did you actually get Michael Jordan to invest? I want to know.
I take no credit for this one. This was all my partner Vasu, working with it. The world of sports is very small, right? And we work with many team owners, right? And I think the interesting part about sports is there's a lot of hype and a lot of attention around team ownership. Previously it was high net worth individuals, families that were buying teams. You've now seen private equity firms come in, establish themselves as a major player in team ownership. And so as you see sports develop into an asset class, the private equity folks who are owning this understood that venture is another component of the asset class. And so many people want exposure, not only to team ownership or the ability to buy teams through private equity, but also in the media, entertainment, gaming, and lifestyle around sports. So it's a diversification of their, capital into the fund. So, yes, we were very fortunate to bring in some amazing team owners, some corporate strategics, some athletes along the way, and they're all very helpful. I always think there's this misconception. We talk about people as team owners or athletes. Well, you see with NIL in the US, athletes are brands now. Right? They oftentimes have more social media followers than the team does, right? Investors who are coming in are executives at some of the most successful private equity firms, largest hedge funds in the world. And so they're incredibly sophisticated and very smart entrepreneurs and business people who we work with, admire, learn from, and work closely with to drive success in the fund.
Yeah, Michael Jordan sold his franchise for $3 billion. For $3 billion, it might be a very good entrepreneur.
Exactly.
And he made the best deal on earth in history of sponsorship with Nike. I'm really wondering how active he is. Well, he's just injected some fund, but he might be also very, strategical support for you.
I think all of our LPs we work with, we reach out to on a regular basis, keep them updated. Many of them are looking for co-investment with us. Many of them are looking for insights that we might have where, in a certain part of the market that they're not as focused on. And that's our job, right? Is to become experts in certain aspects of the industry early on, and then, we see them as thought partners as much as investors. And that's true of great venture capitalists and founders as well. And I have founders who call me and, hey, I'm going through this challenge and there's an opportunity. What are your thoughts and perspective? And to us, the founder always is the one behind the wheel and we're a passenger. Can we be supportive? Can we be helpful? And wherever we can, we step up and try to be active participants in that mission.
Can you describe the usual Kanban day or usual Kanban week? How does it look like?
I don't know if there's a usual or typical one. I'm on the road, anywhere between 20 and 25 weeks of a year, hence some of our delay in getting this schedule. I'm happy to be in one place for several weeks now. Typical day, I wake up, I try to work out every day, at 7 a.m. and start off my day with some exercise, get my body moving. Then I usually take calls from home. I have 6 investments in India. I have several investments in Europe. So I typically do my early morning calls starting from, 8 a.m. on, so I can cover Europe time and cover India Standard Time. Hop into the office where I am today. On Mondays, we always have our partner meetings. So we're all together as a team in the office, going through our portfolio, going through our pacing, going through new deal opportunities, taking pitches. And then really like Tuesday through Wednesday, monthly or, biweekly calls with other venture firms who we co-invest with, taking new pitches, meeting new founders. And then I really try to dedicate most of my Fridays to portfolio support and working with my companies that I've already invested in. So this might be following up on, follow-up capital. Who's investing? Are they a good fit for me? Who should I be reaching out to? Or strategy sessions about growth. Sometimes they turn into therapy sessions and just coaching and mentoring. Really that's a portfolio. So I try to keep some structure in the schedule. Inevitably, it gets blown up with term sheets coming in or issues that are happening and, changes in the macro in the world. No day is really the same, but, I travel to many conferences a year. We'll have opportunities to do podcasts and chat with folks. It keeps it fun and it keeps it different, but you always try to have some structure because you can end up just running and chasing. And I think early on in my venture career, I was always out trying to find a new deal, running around, and I didn't have that structure. And now it's a bit more methodical, but we try to, each one of us tries to meet with at least 10 new companies a week. You figure that's about 500 companies a year. You're looking at where between 2,500 and 3,000 new companies coming across our plate to get to what looks like usually, 10 or 15 investments a year. Right? Wow. It's still a very hard to say no so often, but we try to lend our support even when we say no, how we can be helpful and provide feedback and be good citizens. As a former entrepreneur who's heard no, I heard no. Well, my first company ever, there were 160 no's before I got a yes. In my second company, I heard about 60 no's before a yes. In my third company, I only pitched that to 3 people and I heard 1 yes. It gets better. You get better at pitching. You have some success and, hopefully it becomes a little bit easier, but it's still very challenging on both sides, I think, when no is the default.
Yeah, so I feel very fortunate to have this little time with you in this tight schedule. Let's get on the founder side. It was like asking, what is the one killer question you ask every founder before writing a check? I guess it's not a proper killer question, but what are the main thing that you're looking at before investing in project and people?
I think the really great deals we've done is that the founder of the business has an insight into a market, distribution, disruption, opportunity that no one else has seen. And this comes down to a combination of domain expertise, right? So they know the space they've been in, passionate about it. They've been working in it for a long time. So they have a ton of knowledge about the space, but there's one unique insight or observation that they are seeing that no one else is seeing. And it's non-obvious. And oftentimes these non-obvious things seem crazy or seem almost impossible. There's a conviction and a belief around this that they're willing to sacrifice everything that they have and the comfort of a job or where they are coming from to pursue this. And so the combination of these 3 kind of ingredients into the recipe, in addition to the core skills and, all of the other product market fit, and that's the key element, right? What is the unique insight that you've gotten out of this domain expertise over years that's going to allow you to put it all on the table for the next decade and pursue this dream? And that's really what I think leads us oftentimes to our best outcomes.
Okay. And so what startup you passed on and you not totally regret it?
How much time do you have?
That's so many then.
Yeah. No, look, I think it's part of the ups and downs of venture. There's a saying, if you haven't passed on a good deal, you're probably not seeing the best companies come across your table. Without naming names, we passed on a real money gaming company that I now think is doing multiple billions of dollars of revenue. And we were
fanatics.
Not convinced that the product they were going to market with was a business. We saw it and we perceived it as a product and not a business. And they took this product and grew it into a multi-billion dollar. We missed on that one. Great founder, amazing business, name brand. And, it was unfortunate. We should have done the deal. We kick ourselves over it all the time. And, but we're still very good friends with the founder. I see him at events. He's doing well. We're doing well. I always tell him this is the worst one we've ever done. And he takes it and he smiles. He recommended me, he said, someone's leaving the firm and you guys have a great company. Like, I think they would be a great fit. So the world is small and inevitably great founders do it again and again. And so if you miss one, building the relationship for what might be their next big company, you have to maintain that.
And it also not investing in the wrong ones because you passed on many bad ones and you were very maybe close to invest, but maybe at the end of the day, you said maybe, we have made the right choice.
We've also invested in companies that have gone to zero. Like that's part of seed stage investing, right? Like we get things wrong, right? When you look at the power law dynamics of seed stage, most of the time there's going to be 2 or 4 companies out of a 30 company portfolio that are responsible for driving all of your returns. And so that's why, betting on non-obvious, somewhat, and we do this in real money gaming, the regulatory environment is changing. Tax laws change. So some things can go up and to the right and then come right back down. If there's regulatory change, you don't have control over that. But, our job is to try and de-risk some of that with the, hopefully what we've developed is as expertise around us.
Yeah. You said that the landscape has changed dramatically since the last 10 years. You started in 2016. Why is what is right now the best time in history to invest in sports?
I think that there are many factors that are going into it. I had an opportunity, to speak to an audience recently. It was after the Olympics. And
right,
it was
Olympics in Paris, right?
Yeah, the Olympics in Paris. Great games. Very well done. And it was a pitch competition, right? There are all these folks in the audience, and there's other great funds that are pitching as well. Enterprise SaaS, fintech. And my first question to people was, how many people here watched the Summer Olympics in Paris? And every single human being in the audience raised their hand. There wasn't one person that didn't watch at least something, right? Gymnastics, basketball, you name it, right? People are watching. I think at this moment in time where we see, in many cases, a divided world, where we see the uncertainty of the, macroeconomic environment, geopolitical situations. Sport remains the one thing that unifies us and brings us together. And it's proven that, whether that's valuations of franchise of teams, the success behind leagues, NIL in the US, and players becoming brands, the ability to monetize individuals, the spend behind sports is not going away. Now, I think the interesting part is it is going to change. Consumption will change. My son is 9 years old. He loves playing soccer. He loves playing basketball, baseball, you name it. His interest in sitting down and watching a 3.5 hour or a 2 hour match is very low because he grew up as a generation on Disney Plus, Paramount, Netflix. He's not used to seeing commercials, these breaks. So his attention span is just very different. And that's why I think you see some of these interesting, emerging leagues coming along. We invested in Baller League. You see TGL, shortened formats, highly entertaining. And he is less enamored oftentimes with the true competition as much as he's interested in the entertainment of sport. For sports purists, there was always getting into the nitty gritty of the game. But this idea that, whether it's a lifestyle of playing, we see this in things like pickleball, participatory nature in sport. There's more people that are playing than ever. There are more people that are focused on their wellness than ever. There are more people who want to compete longer in their life and play into their 40s, right? We see it at a professional level. We also see this. I think tennis was a great example of this, where people always say, I can play tennis into my 70s. The desire to not only watch, but also participate in sport and the entertainment value and the lifestyle around it. And I think what a lot of people don't appreciate enough is the lifestyle and the culture of sport. If you're passionate about a sport, it becomes part of who you are. It becomes part of your community, family, your friends. You're gathering around to watch a football match. You're going to tailgate somewhere. And so with that, I think opens up a lot of consumer opportunity, a lot of business opportunity, because this kind of revenue that's coming in is not going to die down anytime soon.
Yeah. You mentioned the leagues, the new leagues. There's plenty of new leagues in the US, a bit less in Europe, but I mean, is the sport league boom a bubble or a long time overdue shift, according to you?
It's a very good question. We were investors in Drone Racing League and Fun One. And so we've actually been following this phenomenon for quite some time. I do think that there is a democratization of what sport is and who can play, right? When you look at the athletes and players in some of these emerging leagues, they're phenomenal. Maybe you're watching, Premier League, or you're watching Ligue 1, or you're watching, Serie A, the best, 1,000 players, but watching someone who's 1,001 to 1,500, they're still incredible. And I think we see this in Olympic sport often, the quality of the game. So is there room for more competition and more games? Yes. People only have so much attention span. How much viewing can you do, right? Seasons have gotten longer. I'm still amazed, right? This year, when you watch, European football, you're starting a season in mid-August. You're playing through UEFA Nations League finals in June, and then they're coming and playing in the FIFA Club World Cup all of July. And preseason started and the leagues kick off in a couple of weeks. So you're almost talking about a 365. The question becomes, are the formats entertaining? Are they interesting? And I think some of the upstart leagues, when you start to think about competition in a different way, it's not just a new soccer league, right? It's thousands of passionate or millions of passionate people who like skateboarding, who are looking at snowboarding. When you look at rodeo, right? This idea of athletes in non-traditional areas that we hold up on a pedestal as the big four or the big five sports, that's what's really fascinating to us, where you're going to see new personalities, new athletes, new forms of entertainment, not necessarily challenging the existing leagues, but the new areas. And that's what I think makes it a lot of fun.
Interesting. Outside of the US, do you see a real traction on the IP, on the new leagues and on the infra? I mean, the startups, the tech and so on, because the US is leaning the way bigger than any other country in the world, in the landscape of sports. So where do you see inflection in which country, the world?
Yeah, no, I mean, since 2019, we've had a big focus on the developments that are happening in India. I think, cricket is a massive global sport. As Americans, the West Indies, cricket is massively popular, right? And you see that in India. You see rugby coming in, right? I think the sevens during the Olympics really brought it to a new state. Getting global audiences, focusing on markets that, and IPL is a great example of this. When you look at the revenue brought in on a per game basis for a league, the IPL in India for Indian cricket is second highest in the world behind the NFL. There's still only 10 teams. what does it look like to kind of continue to develop that ecosystem? That's a fascinating market for us that we've spent a lot of time in that I'm very bullish on.
And Europe, because I'm a little French guy, we had the chance to have the Olympics in Paris, but at the end of the day, now sports, especially with the government that is lowering the investment in sports. What do you think about sport in Europe? Is there anything to do in Europe, or is it's a declining region of the world in the sports as well?
I'd be hard pressed to say that Europe is a declining part of the world.
I think that because this is just after the negotiation with Trump administration when we have the 15 tariff going up and 15% tariff. So we are just a bit like shocked by this news. But anyways, go ahead.
A time of massive uncertainty for many, many folks globally. But I think sport in Europe, and you see this in Spain, right? Like with what's going on with paddle, and that market it's really growing rapidly, right? It's a sport that people are, again, participating in, but also having events, tournaments, the emergence of real leagues. What we'll see in Europe, and it's almost like saying, things in the US, right? Texas is very different than New York, and Florida is very different than California, and it's hard to lump all of Europe together. And I think it's easy to have this view of Europe as one kind of homogenous, well, everybody's in the Champions League, fine. But I think what will happen, and most likely, is that you'll see emergence of leagues. Right? Baller League launched in Germany. It was a very successful launch in Germany. Then it came to the UK market. Paddle's becoming a really big thing in Spain. Well, where's the next market that's going to emerge and grow into? And so I think the pattern that I would likely look for is once something establishes a beachhead in one country and reaches maturity, then it's going to expand into another country. And that's how you kind of grow the sport in a larger way.
You explain how and why sports becomes very hype. You can also see many new competitors or many actors coming into that landscape to invest. What are the biggest mistakes traditional investors are making in this space?
Well, I actually don't think we're seeing that much traditional institutional venture capital firms. I think what we're seeing is a lot of institutional private equity firms looking at sports as an asset class and coming in and investing. But they're doing it through the lens, which I think is very smart. This isn't just a team ownership. When you look at an organization like the Miami Dolphins, right? They recently sold a percentage of the Hard Rock. The Hard Rock also owns a casino, a hotel. So this is a massive investment in an events business, a team, real estate, and it's a very diversified investment. And so I think it makes a lot of sense because they have expertise in that world in real estate, right? In venture, there are more funds popping up, and it's great, quite honestly. When you look at the size of sports globally, and you look at the amount of venture funds that are focused on it, you can go off and find you 150 SaaS funds or 100 fintech funds, and you're still talking about less than a couple dozen sports funds in the world. So the amount of capital that's going in they're big dollars in big headline, but in terms of the number of funds that are doing it, it's still relatively small compared to, where I see capital being raised and deployed in other sections of the venture ecosystem. And so we welcome new players in because we need more money to continue to grow investments in the space. There needs to be, many of these are early stage. We need growth capital to come in. So, we're excited about, the additional capital coming into the market. We co-invest and work with almost all of the other funds in the space. And so, for us, it's interesting in sport. Right? There's always this co-opetition where you're competing in some areas, but you're still working together, right? And I think, the Olympics is a great example. You have all these NBA players who compete all the time, and then they get on an Olympic team and they're playing together. You see this where teams are buying and selling and trading players back and forth across clubs, and they're friendly relationships. They know if the right price is met, they'll do it. It's no different than me investing in something early and someone else marking up a deal, or vice versa, that, we rely on them to be thought partners, co-investors. And, at the end of the day, we need everyone here in this ecosystem to be successful so that more capital can continue to come in.
Okay, let's get back to the founder side. Let's say I'm an entrepreneur and I want to build a company, to create a company in this sector. What would you recommend? Like, what should I do? Like AI, media entertainment, create a new league? What would be like the three main advice you would give me to start the right venture?
I think the first thing is, focus in on what you're good at and where you have expertise and where an industry, a business model, product in and out. right? So that's always the first thing. It come from a position of strength, right, where you are good and where you operate. I was a founder. I always said, like, I went to everyone. The idea of investing oftentimes, I think, is this massive misconception that you just show up at somebody's door, ask for money, and they give it to you. It's very much relationship. Many founders, years, I've had relationships with, and that's because I respect their opinion, their thought leadership, their network. The second one would be, build your network. Go and talk to people. What are you investing in? What are the sizes of checks that you're cutting? Who else should I be learning from? I want to share some information. Right? It's a two-way street. I want to learn from you. I want to know who you are. Because inevitably, we're going to be working together for 10 years. And so you want to start building those relationships early. And then the third is we always look at, kind of what is this traction that you're getting? What are the monthly updates? So I've brought a co-founder up. They're a technology expert building this product. Our goal is to get to market by this date. And then I can start to see, okay, you're telling me in honest communication. We did these three things well. We did these three things poorly. We're making traction here. We need some support. So you're willing to ask for help. You're willing to tell me that things are going wrong. We have a plan in place. And then you solve them and you're building for 6 months, 9 months, a year. And then the opportunity comes. Maybe you raise a pre-seed, right? You go to an accelerator. Then when it's time for me to come and invest at the seed stage, I've been following you. We sit down, we talk, right? We watch a match together. I have a personal relationship. I have a professional relationship. Know what you've been working on. And then the ability for me to get conviction in doing the next round moves much faster. And so that's always kind of the advice that I give to founders is, don't be shy about admitting some of your mistakes. Everybody has mistakes. Everybody has failures. The ability to get through them, solve them is a greater indication of your likely success moving forward, burying them and hiding them.
Yeah. We're getting close to the end of the episode. I want to know what's next for you, what's next in the industry. Today, what are the massive shifts you're seeing? And if you had to draw sports in 10 years' time, what would look like?
Can't give you all of my trade secrets on the call. This is proprietary.
Yeah, so I'm going to make a membership on the end of the episode. So people who's going to pay, I'm going to share the revenue of this.
Exactly. Now everybody's going to be investing in the same categories as you. No, I think, for me, what excites us is, we're seeing sport and we're seeing I think the biggest area is this transformation in consumption, how people are viewing, right? Who is an expert? Why are you watching? When you watch, you can see today people on Twitch who are their own broadcasters. Again, not because they are necessarily better than the two individuals who have interviewed players on the team who have a ton of stats and information and data around it. It's because they're entertainers, right? And people like the personality of someone announcing. So that's moving from broadcast to streaming to new types of, so again, consumption changing. The pace of the viewing, how quick, we see this in lots of sports. How quickly can you get a serve in tennis or a pitch in baseball, shortening formats. So again, these shifts in consumer pattern and media are going to be very meaningful to a next generation and how they've grown up consuming media and entertainment.
Great. Great. I think we close. I used to ask, what are the books or mentors or personal heroes of my guest? What would you say? Who has been a great inspiration for you, for your work and for your life at large? And then what are the main books or resources you will recommend?
Yeah, I would say honestly, my inspiration is my son. When he's 9 years old, I learned a lot from him around failure. Because when you're young, you can't get food, you can't do anything, you can't walk, but it never stops him from trying anything. That fearless, I think, I left a corporate job, after having exited companies to come back and take an entrepreneurial path, and not be scared of potentially failing again. Right. And so taking that leap of faith to show him. So that was a big inspiration in where I am today and how I approach my work and my career. And that's probably been, a big lesson for me. For me, a lot of my work is around interacting with people. So my biggest kind of source of knowledge or where I learn from and where I get the most value from interacting with others. It's actively listening and really being focused on a network of folks, people I do know, people I don't know, new network, being really deliberate around finding individuals who are operators, who are deep in the weeds on certain subjects, so that I can ask them questions that I can learn. And so that's been my main source of, how do I get the expertise around the industry that we're in?
Very good advice. So my last question is the trap question. I asked this to Jérôme Deschonnac, and I have to thank Jérôme because it's thanks to Jérôme Deschonnac, former guest on the podcast, that I had a chance to meet you and to have you on the podcast. So I'm going to ask the same question than Jérôme. Who would you recommend me to contact, like meaning with who you're going to put me in contact as the next guest for Dream Team? His vision, his trajectory is very inspiring, and it's going to enlighten the people listening to this podcast on the sport industry.
In the fact that, we are very much focused on, India as a market. I think having a focus for you now that you've done one in the US, I think, particularly with some of the overlap in cricket being big, in Europe as well, it would be fascinating for you to bring on someone from the India region. I don't know if you're looking for an operator or you're looking for an investor.
I think someone like you who could have a broad perception analysis of India in terms of market growing, in terms of where they're going, because the Ambani family is investing a lot in the sports, mainly controlling the National Olympic Committee, and they are going to apply for hosting the Olympics in 2036. So I guess someone who could explain the overall Indian strategy, markets, and wave that is going to arrive in India, that would be great.
Yeah, well, there's a co-investor who's done some great sports and gaming investments in the India ecosystem. Vani, I was on her podcast, and she's fantastic. She's an early investor in some of the largest consumer outcomes in India around gaming and sport. I think Vani would be a fantastic guest for you, and I'm happy to make the intro.
So let's go for this. Thank you very much, Kai. That was very interesting.
Thank you very much for having me. Take care. Have a good day.
Yeah, bye-bye. Mes amis, chers amis, cet épisode était en anglais, mais évidemment, les prochains seront en français. J'espère que ça vous a plu. Je compte sur vous pour vous abonner sur YouTube, sur Apple Podcasts, sur Spotify, etc. On se retrouve très vite pour les prochains épisodes.